Every time you swipe your credit card, the security timestamp on that exact transaction relies on a signal from a satellite.
Right, which is just something we completely take for granted.
It is, and that satellite is currently flying through this pitch black highway, completely surrounded by invisible, pea-sized rocks that are moving at like 17,500 miles per hour.
Yeah.
If just one of those microscopic rocks hits the wrong piece of metal at the exact wrong time, your bank transaction just fails.
It's wild. But, the physical destruction of that satellite isn't actually the biggest problem here.
Really?
No, I mean, the physical impact is just the spark. The real catastrophe waiting to happen is the financial chain reaction that follows right after.
Wow. Well, welcome to another deep dive. Today we are looking right past the whole science fiction spectacle of space debris to uncover a hidden, real-world financial fault line.
Yeah, a fault line sitting directly beneath the entire global economy.
Exactly. And we have a really fascinating stack of intelligence reports guiding us today for this deep dive. We're synthesizing data from, let's see, the European Space Agency's May 2026 Discos Web Statistics, NASA's Orbital Debris Quarterly.
That one is a heavy read.
Oh, very much so. Plus, we've got Aon's Q1 2026 Space Insurance Market Report, and even some historical congressional records just to figure out how this invisible system actually works.
It is a remarkable set of sources, honestly, because they force two worlds that rarely ever speak to each other, orbital astrophysics and global finance, into the exact same room.
Because, everyone worries about satellites crashing into each other and creating this massive, Hollywood-style debris cloud.
Right, like the movie Gravity.
Yeah, exactly. But the real danger is that the entire global space economy, the system powering your GPS, your weather forecasts, your internet, it's all resting on an insurance safety net that is so fragile that a single collision could bankrupt it literally overnight.
To really grasp how a financial net could snap that easily, though, we first have to establish the physical reality of low Earth orbit today.
Right.
The ESA Discos Web numbers for mid-2026 paint a very, very specific picture. Currently, there are over 54,000 tracked objects larger than 10 centimeters just zipping around the Earth.
Okay, let's unpack this, because when people hear space debris, I think they just picture a couple of dead satellites just sort of floating peacefully out there.
Oh, absolutely.
But these objects aren't just drifting, right? They are caught in this relentless gravitational pull that's balanced by immense lateral velocity, meaning they are moving at roughly 17,500 miles per hour.
Yeah, which is hard to even wrap your head around.
It really is. And mixed into that swarm of 54,000 tracked objects are about 9,300 active payloads, like the actual working satellites we rely on every day.
And the critical word you just used there is track.
Oh, right.
Those 54,000 objects are just the ones large enough for ground-based radar to actually monitor. The ESA models estimate there are another 1.2 million untrackable objects between 1 and 10 centimeters.
Wait, 1.2 million?
Yeah, basically pieces of shrapnel the size of a marble. They're completely invisible to our warning systems, but they're moving at speeds where kinetic energy scales exponentially.
Wow.
At 17,500 miles per hour, a tiny marble hits with the explosive force of a hand grenade.
That is terrifying. So imagine driving your car on a highway where invisible pea-sized rocks are flying at you faster than a bullet.
That's a great way to picture it.
And worse, every time there's a wreck on this highway, the debris doesn't get towed away. It just shatters into 1,000 smaller pieces and stays in your lane forever.
Exactly. And that physical compounding effect is the absolute core of the problem. A NASA scientist named Donald Kessler modeled this exact mechanic way back in 1978.
Okay.
He demonstrated that if an orbital band becomes dense enough, collisions create debris, which then drastically raises the statistical probability of more collisions.
Right, so one crash becomes two.
Two become four, exactly. It creates this runaway chain reaction that could render entire orbital shells just completely impassable.
The famous Kessler Syndrome? For decades, that was treated like this mathematical worst-case scenario, just a theory.
Right, until February 10th, 2009.
Oh, the Iridium crash.
Yes. That was the day an active American Iridium communications satellite basically intersected the path of a massive defunct Russian Kosmos satellite.
And they were moving fast.
Incredibly fast. Their closing speed wasn't just 17,500 miles per hour.
Right.
Because they were moving right toward each other, the impact velocity was roughly 11.7 kilometers per second.
Wait. Kilometers per second?
Yes, that is about 26,000 miles per hour.
Good grief.
In a fraction of a millisecond, that single impact generated 2,370 cataloged trackable fragments of shrapnel. plus countless untrackable ones.
Which totally proved the math was real. The cascade mechanism was no longer just a theory, it was a physical event.
Yeah.
But the public, and frankly the media, stayed entirely fixated on the physical wreckage on the highway.
Right. The focus remained completely on the twisted metal, just completely ignoring the balance sheets.
Here's where it gets really interesting. If this orbital highway is so incredibly dangerous, who on Earth is insuring the drivers?
That is the million or billion dollar question.
Exactly, because when you look at the sheer scale of the global space economy, the disconnect is just jarring. The space economy was valued at $626.4 billion in 2025.
Right.
And it is on track to hit $1.01 trillion by 2034. If you isolate just the downstream U.S. economic value generated by GPS since the 1980s, you are looking at $1.4 trillion.
Yeah, I mean, GPS alone underpins modern logistics, agriculture, aviation, and our financial markets. The economic footprint is monumental.
But then you pull the Aon Q1 2026 space insurance report, and you look at the global space insurance premium pool, it is practically microscopic.
It really is.
It's just $4.43 billion globally in 2026. And the actual maximum working capacity, meaning the total dollar amount underwriters are willing to actually put on the line to cover losses, is only about $425 million for launch risk and a mere $375 million for in-orbit risk. Wait, I have to stop here. If GPS alone created over $1 trillion in value, how can the entire global safety net for objects in orbit be capped at $375 million? Are these satellite operators just out there gambling blindly?
What's fascinating here is that to understand why that safety net is so small, we have to look at the actual mechanics of how space insurance is underwritten.
Okay, how does it work?
Well, satellite operators don't just call up a standard commercial insurance broker like you would for your car. Space insurance is handled by a highly specialized, very concentrated group of roughly 34 specialist syndicates, mostly clustered at Lloyd's of London.
And a syndicate is basically just a group of investors pooling their money to take on extreme risks, right?
Yes, exactly. Because no single company wants to be on the hook for a $300 million satellite blowing up on a launch pad.
Fair enough.
So a broker actually walks a physical slip of paper around the underwriting room at Lloyd's, and different syndicates take tiny, tiny fractions of the risk. They'll say, we'll take 3% of the coverage, or we'll take 5%.
That sounds so old school.
It is. They built this intricate system decades ago, during an era when there were very few incredibly expensive, custom-built government or telecommunications satellites. And they were in very stable, predictable orbits.
Got it. So they were basically insuring a handful of custom-built Ferraris driving on a massive empty racetrack.
That's a perfect analogy. But today's low Earth orbit isn't an empty track anymore. It is packed with thousands of mass-produced satellites, mostly driven by these new mega constellations.
Right.
And the underwriting syndicates looked at that exploding density, they looked at the Kessler math, and decided they simply didn't want the exposure.
They backed out.
Basically. The capital didn't expand to meet the new space age, it retreated. As a result, less than 1% of active low Earth orbit satellites actually carry any in-orbit collision coverage today.
Less than 1%.
Yeah, we are talking maybe 300 out of roughly 10,000 active payloads.
That is insane. That means the vast majority of the infrastructure we rely on is flying completely bare. So what is a dominant player like SpaceX doing with their thousands of Starlink satellites?
They just self-insure.
Really?
Yeah, they bypass the formal insurance market entirely because the premiums are way too high and the capacity is too low. When a Starlink satellite fails or takes a debris hit, SpaceX just writes it off as a routine operating expense.
Because they have the cash to do that.
Exactly. They have the massive capital reserves required to just absorb those hits. But the consequence is that the formal insurance market shrinks into this tiny, fragile little niche, covering a very small slice of legacy, high-value assets.
So we have a $626 billion space economy, heavily reliant on a tiny, outdated insurance pool of just $375 million in working capacity for things already in orbit.
That's a reality.
And we don't even have to theorize about what happens when this mismatched system takes a hit. The sources highlight a real-world case study from just a few months ago that pushed this entire architecture right to its breaking point.
Yeah, and even before this year, the market was bleeding. The Aon data from 2023 shows underwriters collected roughly $557 million in premiums globally. But they were forced to pay out nearly $995 million in claims.
Wow. That is nearly double what they took in. That's a loss ratio of what, about 180%?
Just about. And the mechanism of that loss is really important to understand. It wasn't some massive systemic debris cascade. It was just a handful of isolated named failures.
Like which ones?
Satellites like Viasat-3, SES-03B SAMPOWER, and Inmarsat-6F2, they just experienced technical anomalies.
Yeah.
Just a few malfunctioning assets wiped out the entire premium pool, and then some. So the underwriters were already incredibly defensive.
And then January 2026 happens.
Right.
Spain's military communications satellite, SpainSat NG II, is maneuvering toward its final orbit. It's this massive, state-of-the-art piece of hardware, but it intersects with a millimeter-scale space particle.
Just a speck.
Just a speck of untrackable debris. And by January 16th, that tiny impact results in the satellite being declared a non-recoverable total loss.
It's devastating.
And it was insured for approximately $400 million.
Now, compare that single $400 million claim to the entire global in-orbit capacity we talked about.
The maximum working capacity was $375 million for the whole year.
Exactly.
This is like a small-town insurance pool where 100 people chip in a few bucks for fire insurance, and then the single biggest mansion in the county burns down on January 2nd.
Yeah, the math just breaks.
But the operator, Histisat, they come out and confidently issue a statement saying, "We are fully insured against this type of incident. There is no economic damage to us." They're perfectly happy they got a check.
Sure they are.
But doesn't that operator's confidence completely mask the systemic fragility here? That one claim essentially devours the market's entire buffer.
Oh, the confidence of individual operators absolutely masks the broader danger. Satellite operators, they think locally. They manage their own balance sheet.
Right.
If their specific policy pays out, their shareholders are protected, and as far as they're concerned, the system worked. But the underwriters at Lloyd's of London, they think systemically.
See the big picture.
They look at that $400 million payout and realize their risk models are completely failing. They're insuring an environment where a microscopic, untrackable rock can instantly vaporize hundreds of millions of dollars of capital, and there's just no way to price that risk accurately.
So what does this all mean for the future? Because if the physical density of debris is increasing and the insurance pool is literally one claim away from bankruptcy, what happens when a true Kessler collision cascade actually hits a congested orbital shell? Who gets the bill for that?
Well, the legal framework for assigning that bill practically doesn't exist.
Seriously?
Yeah. The foundational law for orbit is the Outer Space Treaty of 1967 and its companion, the 1972 Liability Convention. Under those treaties, if a piece of space debris damages your satellite in orbit, you have to prove fault to claim damages from the launching state.
But how do you prove fault? I mean, if a 30-year-old defunct Russian satellite gets bumped by a piece of untrackable shrapnel, gets knocked slightly off course, and shatters an American commercial satellite, who is negligent?
Proving negligence in an environment with no traffic laws, no stop signs, and objects moving at 17,500 miles per hour is just a legal impossibility.
Yeah. That makes sense.
Insurance trade presses are actively warning that a major cascade would generate liability claims with basically no precedent in existing treaty law, no established fault framework, and likely no solvent defendant to sue anyway. It is essentially an unquantifiable liability.
And when insurance markets face unquantifiable risk, history shows us they don't just slowly raise their prices and hope for the best. They run for the exits.
Exactly. If we connect this to the bigger picture, we can look at exactly how specialized insurance markets behave during a massive systemic shock. The most direct parallel we have is the aviation sector immediately following the September 11 attacks in 2001.
Because when the planes were weaponized, suddenly the entire risk model for aviation just shattered.
Precisely. And the reaction wasn't some gradual softening of coverage. The aviation war risk insurance market just panicked.
I can imagine.
Within roughly 2 weeks, by September 26, 2001, United Airlines war risk liability insurance was canceled outright. Other airlines faced the exact same threat. And without liability insurance, you legally cannot fly a commercial jet.
So the industry just ground to a halt?
The private insurance market simply evaporated.
Which forced the government's hand, because the FAA had to step in immediately to provide an emergency backstop just to keep the planes from being grounded permanently. And then what? The following year, Congress enacted TRIA?
Yes, the Terrorism Risk Insurance Act.
Right.
The mechanism of TRIA is crucial to understand here. The private market realized it could never independently price the risk of another 9/11. So TRIA created a permanent taxpayer-funded backstop.
Okay, how did that work?
It essentially said to the private insurers, you cover the first tier of losses, and the federal government will step in and cover the catastrophic, multi-billion-dollar tail risk. It was the only way to reconstitute the market.
But wait, if a Kessler event happens tomorrow and insurers pull out of space entirely, is a government bailout in orbit inevitable? And practically speaking, who even issues that bailout?
That's the million-dollar question.
I mean, the FAA stepped in for American Airlines over American airspace, but low Earth orbit is international waters. It belongs to everyone and no one.
And that jurisdiction problem is exactly why there is no TRIA for orbit right now. No single government wants to unilaterally underwrite the catastrophic risk of a global orbital commons.
Right. Why would they foot the bill for the world?
Exactly. But specialized insurance markets, snap. They do not bend. If a major collision occurs and syndicates pull their in-orbit coverage on a 2-week notice, the shockwave isn't just confined to aerospace engineers.
Yeah, we tend to think of space as this abstract frontier for billionaires and astronauts. But if the coverage snaps and satellites start failing without replacement, the impact hits the ground almost instantly.
This raises an important question about our everyday reliance on this infrastructure. Like we said, the financial transaction timing infrastructure that your bank uses to process your direct deposit.
Yeah.
It relies on precise timing signals from satellites. The global weather forecasting models, which dictate agricultural yields, shipping routes, and disaster response. Heavily reliant on satellites.
Wow.
If the insurance market collapses, the capital to replace those vital satellites just dries up. This is fundamentally a capital markets story, masquerading as an astrophysics story.
Looking at the intelligence reports, our sources map out 3 distinct scenarios for how this hidden fault line might actually rupture or resolve in the near future.
Okay, let's hear them.
Scenario 1 is basically the slow squeeze.
Okay.
Over the next 12 to 24 months, we don't see a massive dramatic cascade, but premiums just keep hardening. Capacity keeps shrinking, concentrating only on the absolute most pristine risks.
And under that scenario, the formal insurance market effectively prices out everyone except government entities. The commercial space sector is left entirely to the massive monopolies like SpaceX, who have enough internal capital to just self-insure against the physical risks.
Right. Then, scenario 2 is the sudden shock. We get one bad commercial collision. It isn't a full Kessler cascade, just a really messy crash in a busy orbital shell, but it generates a claim so large that it consumes a full year's capacity, exactly like the SpainSat NG II incident almost did.
And that is what triggers the 9/11 aviation reaction. The underwriters look at the compounding debris, realize their pricing models are completely broken, and they just pull low Earth orbit collision coverage across the board on incredibly short notice. The market vanishes overnight.
And then there's scenario 3, the absolute worst case scenario.
Yeah.
A genuine self-sustaining Kessler cascade actually initiates. Millions of untrackable fragments turn key orbital bands into an absolute blender. Low Earth orbit becomes definitively uninsurable in the private market.
To protect the $626 billion space economy in that scenario, international governments would be forced to step in and hastily construct a massive, multinational TRIA-style backstop funded by taxpayers.
Which sounds incredibly complicated.
It would require unprecedented global cooperation to underwrite the risk, just to keep basic satellite services functioning.
Okay, let's take a breath and recap this incredible journey we've just been on. We started by looking up at what seems like a peaceful, empty sky, only to discover a chaotic highway where 54,000 tracked pieces of shrapnel and over 1 million invisible ones are flying at 17,500 miles per hour.
Yeah.
We uncovered that beneath this immense physical danger is an incredibly outdated, tiny $375 million insurance safety net trying to protect a $626 billion global economy.
It's quite the mismatch.
And we broke down how the legal impossibility of assigning fault in space means a single catastrophic collision could cause the entire private insurance market to just vanish in a matter of weeks, threatening the GPS and banking infrastructure you rely on every single day.
The financial realities of low Earth orbit completely change the way you look at the night sky. The physical environment is entirely dictating the financial one.
It really does. But before we wrap up this deep dive, I want to leave you with one final provocative thought based on the sources we've unpacked today. We established earlier that mega constellations like Starlink are already bypassing this fragile insurance market by simply self-insuring.
Right.
They have the deep pockets to absorb a total loss as just a simple cost of doing business. But if this private insurance market does snap and no global government coalition steps in fast enough to build a space backstop like TRIA, does that mean the stars will soon belong only to the mega corporations?
That is a chilling thought.
Will smaller nations, independent researchers, and brilliant commercial innovators be completely priced out of orbit simply because they can't afford the entry ticket without an insurance policy to back them up?
The capital required to survive an uninsured void might become the ultimate barrier to entry. The financial environment will absolutely dictate who gets to participate in the future of space.
A completely hidden fault line deciding the future of humanity's reach. Thank you for joining us on this deep dive and exploring these sources. Keep looking up, but more importantly, keep questioning the invisible financial systems running our world. Until next time.